Hello, am I audible?
Yes, Mayur.
Hello, hi Mayur. Yes.
Hello, great. Good evening, guys. So we'll have a refresher course on finance. I've prepared a presentation. Let me know if the presentation is visible.
Yes, it's visible.
Great. So, just a quick understanding from you guys. How many of you are from finance background? Like,
Yeah, I
would
have done my
usually
BCom in finance.
like you guys can also use raise your hand so that I can just see how many of you are. One. Okay. So I only see one person. One, two. So we can safely assume that most of you do not have a finance background. Come on, guys. We can keep it interactive.
No, I don't think so.
So most of you have finance background.
No,
No,
Mayur.
yeah, that's what I meant. Nobody, I think most of us do not have a finance background.
Great. So over this course, I am expecting that you guys will be able to understand some basic bits of finance, and you can also use this knowledge to help yourself answer any finance questions that can be thrown at you during the interviews or any other interview process that is going to be scheduled. So, okay. The topics that I'll broadly be covering today would be financial statements, the ratio analysis, time value of money with budgeting and costing. These two are a part of your corporate finance. Investments, financial markets, which are generally something which people are interested in. And when you mention these topics, there are some things which you are supposed to be knowing, and a bit about banking. Okay. Anyone here know what an accounting equation is?
Debit what comes in, credit what goes out.
That is one of the golden rules of accounting. Anyone else wants to take a swing at it?
Maybe to balance the assets and liabilities.
Yes, yes. So, the simple accounting equation is called as assets is equal to equity plus liability. Though the equation looks a little big, the simple thing is assets are things that we own, equity and liability are things that we owe, right? Yes.
Yes.
Okay.
Right.
Okay. I want you guys to respond because I'm looking at the screen and I do not know if you guys are understanding or not. At any given point of time, if anything gets slightly complicated or you find it a bit not comfortable, you guys need to let me know because I'm trying to make it as simple as possible.
Okay, sure,
Do
Mayur.
do any of you feel finance is a difficult subject?
Yes, I
Yes,
do.
I think it's for me.
Yes.
Okay.
Definitely.
The most easiest way to understand finance is to relate it to your own personal life. If you were supposed to do something with respect to your money, how would you usually do it? And once you relate it to your own personal life, it's going to be very, very simple. Okay. So, for example, if we consider assets equals equity plus liability in your personal life, what are the different assets that you own? You may own a bike, you may own a car, or you may own any other kind of assets. You may own textbooks, right?
Yes. Yes.
And when it comes to liability, how did you purchase these books, textbooks, or vehicles, car, or any other kind of assets? You would have either taken money from your parents, or if you have WorkX, you would have sponsored yourself from your working,
Okay.
right?
Yes.
So that is how we will make a correlation between the finance topics and our personal life to make our understanding of the topics pretty strong.
Okay.
Okay. So generally, any business needs to prepare financial statements. There are three main financial statements: the balance sheet, the income statement, and the cash flow statement. In
Okay.
addition to these three, we also have something called as notes to accounts. Notes to accounts is a statement which will explain each and every line item of the balance sheet, income statement, and cash flow statement is self-explanatory. We'll come to that. Okay. Uh, every company will have to present this to show to the stakeholders. Stakeholders are people who have a stake in the business. They can be shareholders, they can be government, they can be suppliers, they can be customers and consumers. Why would you and I, as a customer, be interested in the financial statements of a company?
No, if
Because how the
somebody
To
companies
see
helps in that.
One of you.
And so I was saying because we might own some of the stakes, like in the form of shares in that company.
No, but then you would be interested in the strength of an investor.
to analyze
As a,
how the performance of the company is.
yeah, so why would you want to analyze? You are purchasing the product and you're going home. Why do you have to understand the financial health of the company?
So if I am purchasing, like giving an example of something very expensive, say 2-3 crore items, and I am placing my trust with an organization, so I need to know the company's financial health.
Yes, that's right. So if we are purchasing some long-term capital good kind of a product, and that would require some servicing. For example, you purchase an air conditioner, or you purchase a refrigerator or a washing machine. It will need regular servicing, right? If the company from which you purchased does not have enough financial strength to sustain its business and closes down in a year, the product that you purchase may not get replaced, or it may fall within the warranty period and it may not get repaired within the time. And you may not get the parts, service parts that you need for the product. For these kinds of reasons, we usually tend to buy products from a reputable brand. That is the overall objective. Though we don't specifically look at the financial statements, we do look at the brand value, which indirectly we consider it to be a financial strength of the organization. Right?
Okay.
Okay.
Yeah. Do you guys have any doubt in this till now?
No, all good.
No.
Yes. Perfect. So, coming to the first financial statement, which is called the balance sheet. Balance sheet is called statement as on date. As on today, what are your assets? What are your liabilities? And the difference between your assets and liabilities is your overall wealth,
Okay.
right? So, let's say you have different assets with you. Can one of you tell what are the different assets that you own?
Mobile phone, laptop,
Mobile phone,
Lap-
laptop,
Home,
Yes,
house.
bike,
yes. And
Credit
how
card.
did you
amount in bank.
sponsor? And how did you sponsor these assets?
self.
So I sponsor it by myself.
Yes, so you don't have any payables.
Correct.
Yes.
Yes, so you have zero liabilities. And if you have to mention any liabilities, something that you have to pay, what kind of payments would you usually have?
Loans, debt,
So you
or
have a debt.
EMIs.
EMIs.
Yes.
Creditors,
Uh, Creditors, what kind of creditors do you have, Neil?
like those who have provided the short-term loans or long-term loans to us.
Yes. So you've taken
I don't know if it is
money from
creditors or
people.
creditors.
Yeah, it's creditors.
I don't know.
So yeah. So that is how we calculate our liabilities. Now, what is your shareholder equity?
Sorry, could you repeat, Mayur, please?
Yes, Mayur,
Shareholder
we
equity
can't hear
for you
you.
as an only the balance. Am I audible now?
Yeah, now
Yes,
it's
you're
audible.
Yes,
audible now,
now
but
audible.
we lost you when you said that, like, what is the difference between asset and liabilities? मतलब, जो gap होगा, what would we calling it?
Okay. So I'll just explain what in general shareholder equity is, and then I would want you to explain what in your balance sheet would be the shareholder equity. So shareholder equity is the difference between assets and liabilities. Let's say you have 100 rupees of assets and you have 20 rupees of liabilities. Shareholder equity is the balance 80 rupees. So if in your life you have 100 rupees of assets and a 20 rupee of liability, what is this 80 called in your life, in your personal life?
Net worth.
Yes, that is your net worth. So basically, shareholder equity is the net worth of the organization. This is how you would start looking at the balance sheet of any companies. Certain technical aspects, we'll just get into small technical aspects. In assets and liabilities, there are two broad categories. One is the current assets and the non-current assets. In liabilities also, there is current liabilities and non-current liabilities. The simple difference between current and non-current is current is something which gets converted to cash within a period of 1 year. For assets, it gets converted to cash within a period of 1 year. For liabilities, it will be paid within 1 year. Anything that is not current assets or current liabilities is considered as a non-current asset. So direct understanding would be anything which is expected to be converted to cash post 1 year, or anything which requires a payment of money post 1 year. Yes. Yes.
Okay.
Is the thing simple?
Yes.
Mayur, can
Uh,
you give me some examples of non-current assets?
so let's say you have a house, real estate, right? You don't keep, if you plan on selling your house or a land, you will not be able to find a buyer immediately, right? And you
True,
don't buy a real estate or a house to sell it in the next 1 year, unless that is your business.
true. Okay. So
Yes.
One
basically,
And
example can be ELSS mutual fund. Like they can be
yes,
encashed only after 3+ years.
yes. So yeah, that is also right. So that falls under the category of investments. You invest for a long-term period. Once you have a long-term idea of an investment, then you would be considering those as non-current assets. And that's a very good example.
so
Okay.
basically the difference between current and non-current assets lies in the fact that you cannot encash the non-current assets within a year.
Uh, you no, you are expected to convert it. So here it is the intention.
Okay,
Your
got it.
long-term assets, investment, for example, let's say you invest in a mutual fund. ELSS has a condition that you have to hold it for 3 years. However, let's say you invest in any stock. Let's say you love Reliance company as a whole, and then you put money into Reliance as an investment, and you do not plan on selling it for the next 1 year. You plan on holding it for a longer period of time. Because you have an intent of holding it for a long period of time, that translate into being a non-current assets. However, here your investment can be sold in the short term, like you purchased now. In 1 month, you had an emergency. You sold the asset because you had an emergency, but still you would categorize it today as a long-term investment because you plan on holding it for more than 1 year.
Got it.
Investment in stocks options like Sensex and Nifty can be example of current asset, like,
So,
right?
okay, current assets. Let's not get into stock options. Things will get complicated once we go there. But let's keep things simple. For example, you have a cash balance in your bank, right? You have cash in your purse, you have cash at your home. Those are current assets. And let's say you have lent some small amount of money to your friends because they were in need of something. So those things are current assets. Yes.
Okay.
Yes, got it.
Need any more clarification?
I think it's good.
No, sir, good.
Okay, perfect. Next, let's look at income statement. Income statement has two sides. One is the revenues or incomes. The other side is the expenses and losses. Okay. Revenues, let's say you are having a salary, right? You're going to a job, you're earning income, you're earning salary. Those are your revenues. Your expenses are your daily consumption of food, your travel, you pay money to purchase some uh, what do I say? You pay money to purchase some groceries and you to do your daily activities, daily operations. The expenses that you incur to make your daily operations is called your expenses. Now let me ask you a question. You purchase a car, right? This is an expense.
Okay.
Is this an expense which you will put to your income statement? Would you want to put this to your income statement? Because it's a income, revenue, and expenses. It's a statement of your revenue and expenses.
Yes, it's an expense from my account, so I think I should put it in the expense.
Right. Everyone else also agrees with that statement?
Yes.
Yes.
Yes. However, in accounting, we have a small bit of differentiation which we will do over here. If you put, before we get into that, one more important point. Income statement is prepared for a period. You remember balance sheet, we said we prepare it as on a particular date. As on today, what is my position of my assets and liabilities? Whereas income statement, we'll prepare it for a period. Usually this period is for 1 year in terms of companies. So what would we do? We will also try to do it for 1 year. In the last 1 year, what has been our income and what has been our expenses? In the expenses, there are certain conditions. Like the expenses are categorized into capital and revenue expenditures. Capital expenditures are those expenditures for which you will derive benefit for a long period of time. Remember we mentioned current and non-current?
Yes.
Similarly, the expenditures where you plan to derive the benefit for a long period of time are those which will not come in income statement. Expenses which you derive benefit immediately or within one period of time is what you will put in the income statement. Is that clear?
Okay. Yeah.
Do any of you have any clarifications in those points?
So for the one second. For the assets which we'll be using in for a longer period of time, we won't be including it in the income statement.
Yes,
Okay. Understood.
those are the general ideas.
But why is it so like?
Yes, great question. So let's say you are preparing your income statement, right? You have spent, what do I say? Let's say you have an income of around 100 rupees. You made other general expenditures for your food, travel, and other regular day-to-day operations as another 20 rupees, and you purchased a car for 30 rupees, right? You plan to use this car for a long period of time, more than 1 year, more than the period of your income statement. You show this car in your asset side. Yes.
One clarification, Mayur. Like, suppose I buy a car in this year, but before the year
Mm,
close, I sell the car. So now,
okay.
will this be considered expense? Like, say I bought it for 1 lakh, I sold it for 50,000. So
Hmm.
will I be adding 50,000 to my income statement?
Uh, so because that is your profit, you will show your profit in the income statement. How much
Okay.
profit did you make?
I
When
made a
you
loss of 50,000 on this.
so when you make a loss of 50,000, your loss of 50,000 will be shown as a loss in your income statement.
Okay, okay.
When you purchase it and you sell it, there is a profit or loss.
Mm-hmm.
When you purchase a car, it is not an expense, it is an asset,
Mm-hmm.
right? There is a
Yes.
critical difference over here, that an expense and an asset. You are clearly able to make a difference between an expense and an asset, right? When
Yes,
you
yes.
purchase a food, when you purchase order from Swiggy for your requirement, that is not your asset.
Yes,
That
yes.
is your expenditure. When
Mm.
you purchase a car, that is an asset.
Okay.
When you purchase anything that you plan to use for a longer period of time, those are your assets. And when you purchase an asset, it is generally considered as a capital expenditure.
Okay, understood. Thanks.
Okay. I was not able to look at your name, the one who asked the doubt.
Yeah,
Why
yeah.
My name
we
is
are not.
Abhishek.
Is it clear to you also?
Yes, yes. It's clear.
Okay, Anshul. Nice. Okay, yeah. So we understood the kind of expense that is uh, entered in the income statement, and almost all incomes are included in the revenue statement. Can you give an example of what are the different revenue streams that you will have?
The job I'm working for.
Yes. Anything else?
There
Um,
is
income
return on
tax.
investment like bank interest.
Yes. Interest income is the second set of income which we as individuals would usually have. Great. So next. Next, we'll look at the cash flow statement. Cash flow statement is the third statement in the different types of financial statements that a company has to mandatorily prepare. Cash flow statement demonstrates or showcases the different sources from which cash has come in and different areas of application of our cash. The cash flow statement is categorized into three different categories. One is the operating, investing, and financing. Um, Simple understanding of this categorization is operating cash flows are your day-to-day businesses. Like you go to job, you come back, you have an expenditure, daily recurring expenditures. These are your operating cash flows, things which are necessary to help you sustain your life. Investing cash flows, as the name suggests, these are investing activities. Let's say you invest in shares, you invest in a building, you invest in any kinds of car, machinery, assets, right? You making your investment in any kinds of non-current assets are usually your investing activities. financing activities are those activities through which you get money to fund your investment or fund your operations. Is this clear?
Yes, Mayur.
You guys have any doubt?
Mayur, can you once again explain investing cash flows and financing cash?
Yeah. So investing cash flows are those areas where you invest your money. Let's say you purchased a stock or a share of a different company. That is your investment. You purchased a land. That is your investment, right?
Okay,
And then
yeah.
how did you invest for the land? You took a loan. That is your financing activity.
Okay, so one
Yes?
process can come under two cash flows.
No.
So if I'm buying a property to loan or
Hmm.
something, will it come under investing cash flows or
No.
financing cash flows?
So if you drill down to the nitty-gritties of this transaction, there are actually two transactions. One transaction is that you are taking a loan. The other transaction is that you are investing in an asset. They are two different activities.
Yes. So under what cash flow will it come?
So the activity of taking a loan is financing activity.
Okay,
The activity of purchasing a fixed asset, land or building is your investing activity.
okay, okay, got it.
So you understood? So there's a question for you right now. So let's say I sell the land that I purchased. Which activity would that be?
Financing,
Why is it financing?
because I'm selling, so I'll have no, it's nahi. uh, confused हो गए.
Hmm, ठीक
But
है.
financing ही होगा ना, because you're selling it, so you're not investing, so it's definitely not under
Okay.
investing cash flows.
So let me give this clarification. That is why I wanted to bring this point. It's very important key when the transaction was an investing activity when you purchased the fixed asset. When you sell, it will again go back to your investing activity.
Okay.
Yeah.
Right.
So when you repay the loan, would that be investing?
That would be financial.
Financing.
Yes. क्योंकि repaying your loan is not investing in any way that we look in, right?
What we gain through investing cash flows, and if that asset is going back, it will again come under investing cash flows only.
Yes. Perfect. So I have, is it clear?
Yes.
Is okay. I have another question. Let's say I'm putting money into a fixed deposit. I hope all of you are aware of what a fixed deposit is, right?
Yes.
So let's say I'm putting in money into a fixed deposit. What kind of activity is that?
Investing.
Okay. Anyone else has a different opinion? Okay. I'll assume everyone is agreeing to that. So when I put money into fixed deposit, I'll get interest. So interest is an income. Where does interest income come into?
Financing.
Finance cash flow.
Are you sure?
Okay, it's
Anyone has?
maybe operating cash flows as well.
Is that my day-to-day activity?
It will be financing.
No.
Am I trying to fund something or borrow or issue something?
No.
So, like I mentioned, when you sell an invested asset, it falls back into investing activity. Any income that you generate through investment activity will also come through investing activities.
Okay.
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 There are two schools of thought over here. The US accounting principles say that they want to show this under operating activity, whereas the Indian accounting principles usually mention that you show this under investing activity, the main activity from which you have derived the income from. Got it?
Mayur, what was your what was your actual question? Can you repeat it?
So my question was, if I'm doing a fixed deposit investment, it goes into investing activity.
Okay. Okay.
Now
Yeah.
the fixed deposit has generated some interest income for me.
So it will again go back to investing cash.
It will again go back to investing activity.
And the principal amount would also come under investing.
Yes, the principal amount is also in the investing activity.
Okay.
Okay. Now, adding one more question to ensure that your concepts are clear. Now, I borrowed money, loan, that comes under?
Financing.
Yes.
Financing.
Yes. Now, if I am paying interest on the borrowed loan,
Financing.
yes. Perfect. Very simple, right?
Yes.
You made it simple. Finance is not at all simple.
This does not seem complicated, right?
Right now it doesn't because you're explaining through examples. Otherwise, I'm very afraid of maths and finance and stuff.
So yeah, I have heard this a lot from a lot of students. That is why I have used this technique where I ask people to relate it to their own life. And then once you have something where you have annexed it to your own life or some situation or some example, it's hard to forget. Now, I hope this will help you remember things also.
Yes, it is helping us. Like we are able to relate things like from our personal life examples.
Yes,
Yes, and
perfect.
also the questions that is also making it clear if you're understanding it properly or not.
Yes, good. I'm happy you guys are learning. The next topic that we'll be reading for studying today would be ratio analysis. Okay, so ratio analysis can be broadly categorized into four different categories. This may get a bit more into technical, but it's very simple. Again, using these ratios, we'll go back to the financial statements, where we will try to understand the financial strength of the company using different ratios. Okay. The four different ratios are broadly categorized into liquidity, activity ratios, solvency ratios, profitability ratios. Um, any of you have any interest in investing, trading, investing, looking at financial statements, or have
Yes, sir.
attended some session or something about any of
Y-
these activities? Yeah.
Yes, Mayur, I used to do investing a lot.
A little,
So,
not much.
okay. Others?
My father is an intraday trader, but I have zero knowledge of trading. He's very
Okay. Okay. So, if you're not directly invested, have you seen any news where, let's say, CNBC or some other news channel, just while scrolling through your channels, like you wanted to look at Cartoon Network, but suddenly CNBC came into picture and you saw green, red, and different things, and someone over there standing and saying the profit of XYZ company grew at 10%, the profit of ABC company fell by 10%, different
Yes.
ratios are being mentioned, or somewhere on the news headline that you saw that the liquidity of this company is not strong, the solvency is not really good.
yes.
Sure, you
Yes.
guys would have
Yes, yes.
seen, right? You've seen, heard, or heard some people discuss about these things. right? So
Yes.
today we will understand what it actually means. So there are three different liquidity ratios: quick ratio, cash ratio, current ratio. What does liquidity ratio simply mean? Remember, in fixed balance sheet, we understood there is something called as current asset and current liabilities.
Yes.
Let me go back. So here, current assets are my cash, receivables, and other inventories and other stuff. My current liabilities are accounts payable and other current liabilities. Current liability is the ratio of current assets by current liabilities. My current assets, which is cash in general, and my current liabilities are something which I have to pay within 1 year. The cash that I will have within 1 year and the cash that I'll pay within 1 year. कैसे पता चला? हाँ हो रही है this. So yeah, there was a current liabilities and current assets, current ratios. Yeah. So current ratio is the ratio of current assets and current liabilities. The ratio between current assets and current liabilities. Current assets are assets which are expected to be converted to cash in less than 1 year. Current liabilities are liabilities which are expected to be paid within 1 year. Yes?
Yes,
Uh,
got it.
yes. Got it.
Yes. So if I am sure you guys are all perfectly confident with your ratio analysis concepts, right? Part of your CAT
Yes.
examination.
Yes.
Yes. So what ratio would you want this current ratio to be at, which is current assets by current liabilities?
Asset should be.
Yeah, जितना भी ज़्यादा हो, like the more the better.
Yeah.
Yeah.
The higher the
Greater
better.
than one.
Yeah.
Oh.
Yes, greater than one typically, right? So that is what we also want to look in when we look at any company's balance sheet. We look at their current ratio, and if their current ratio is greater than one, then we say that the company is good. It has good liquidity in it. At in the near future, if any unforeseen circumstances come into play, they are comfortably in a position where they can repay their liabilities, short-term liabilities,
Yes.
right?
Yeah.
Yes. So that
Yeah.
is one ratio. Any doubts?
No.
This one is pretty clear.
Very
Oh,
clear.
perfect. So that is one broad ratio. Now, a subset of current ratio has two other ratios, which is quick ratio and cash ratio. Now, these two ratios are pretty much done for companies, may not be specifically applicable for us as individuals. Companies usually have inventories. Now, do we understand what an inventory is? This part over here.
Yes.
Anyone who
I
does not understand what an inventory? Yeah.
I do not know what an inventory is.
Okay. So inventories are those materials which are held by the business for sale purpose, resale or sale purpose. For example, when you go to a paint shop, the paints that the shop owns is called an inventory. The things that you go to a shop to purchase are the inventories of the business.
Basically, the product of the business.
Yes, basically the product of the business.
Okay, got it.
Okay.
Will it not count the raw materials and in process inventory?
Yes, those are also part of inventories, but I did not want to complicate that at this point. But
Okay.
yes, since you brought in that topic, let me explain it to the whole batch. Inventories are categorized into three different parts. One is the raw material, one is the work in progress, the other is the finished goods. The one that we go to a shop and purchase the products, as you mentioned, is called the finished good. However, before making the finished good, let's say you went to purchase a water bottle. To manufacture the water bottle, there are some plastics required. There are some molds required. There are some other required products that is needed to make this water bottle. So those products which are required to make these products are called raw materials, and these raw materials also form a part of inventory. What is work in progress? These raw materials are partially converted into finished goods. That is, only the bottle is manufactured, but the cap is not manufactured. So these products fall under the work in progress category. Is this clear?
Yes, got
Yes,
it.
ma'am.
Yeah. And it depends. If the company is in a manufacturing activity, then it may have raw material, work in progress, and finished goods. But if it's a trading company which purchases and sells the materials or products, then it may not have raw material and work in progress.
So, I have a quick question here. What
Yes.
about companies who are service-based? They do not have
Yes.
products.
Yes. So what will be their inventory?
Yes. Yeah, that's the question.
How would, if you were given this question, you are in an interview and you are asked this question, what would your answer be? Think logically. Tell the first thing that comes to your mind. It's okay.
Probably, when we are offering the services, we would have some
Mm.
sort of resources. Would that be counted as inventory?
What kind of resources?
So,
Workforce.
But workforce, you don't consider workforce as an inventory, right? Would you be happy being called as an inventory in an organization?
No, not at all.
no.
Yeah, so workforce will not come in inventory. So, okay, I'll just put you out of your misery. There is no inventory for a service organization. This is one of the drawbacks of accounting, or not drawbacks. This is one of the difficulties in accounting. Human resource is something which is a huge asset to any organization. But there has not been any system which has been developed through which we can recognize this as an asset. What happens is usually these expenses for human resource goes away in your income statement as employee cost.
So rather
Uh,
than being a revenue, it comes under expense.
yeah, for a company, if they are paying salary to employees, that is their expense.
Oh, yes, got it.
Yes. So for a service organization, there is no inventory because we are not able to recognize any inventory of service as of now.
Got it.
Yeah. So that is why inventory is zero, but that's a very good question that you asked. I was about to ask that question next. So yeah. So we understood what an inventory is, and inventory forms a part of your current asset. Can you tell why inventory forms a part of your current asset?
That can be encashed within a
Yes, it
one
can
year
be
period.
encashed. Mm.
No, can be is not the right point. It is expected. You can
Okay.
manufacture an inventory and it may not get sold within a year, but you're
Okay.
expecting that you will sell that within a year,
Okay.
right? So that is very
One
important.
question on that, like, for the organization for which like
Mhm.
projects which goes on for like more than a 1 year period, suppose submarine
Yes,
manufacturing. So
yes,
in that case, also inventory would be coming under current assets.
yes. So here, for ease of understanding, we have used the word 1 year. For most of the businesses in the world, 1 year would be a reasonable time frame to be considered as a business period or a business cycle or manufacturing cycle. For specific instruments or specific products like submarines and other projects, which usually require more than 1 year, we will say one business period or one accounting period would consist of that particular cycle. Like, let's say, for example, to manufacture a submarine, it would require 1.5 or 2 years. For the manufacturing of submarine business, their business period would usually be 2 years. So their current asset classification would not be 1 year, it would be 2 years.
Okay, understood.
The
And
basic,
how will you get, yeah, ask me.
so the basic accounting principle will only change ki rather than being less than 1 year, it will be less than 2 years. It is
Yes,
only
yes. And here, for ease of understanding, I mentioned it as 1 year. It is usually a business cycle.
or less than a business cycle.
Yes. But
Okay.
let's keep it at 1 year because most of the businesses, since you are not finance graduates, you will not be asked such kind of questions. But this is something for your understanding. Now, since we have this understanding, how do we understand what is the business cycle for any company that we start looking into?
So the time frame from when the raw materials are taken and the finished product is made, that would be
Yeah,
a
but
business cycle.
how perfect. But where is this information? How will you get to know?
Industry data, like it may vary with the industries.
No. So this is where you remember I mentioned a fourth statement called notes to accounts. Somewhere in
Sorry,
the beginning
can you repeat?
here, I was mentioning
Notes
somewhere
to
in the
account.
beginning when I was explaining in this slide, I mentioned there is a fourth statement which is called notes to accounts.
Okay, uh-huh.
Notes to accounts gives you a explanation of each and every line item of the balance sheet and income statement. And it also gives you an information about the different assumptions and um, logics that the company has considered in preparing these financial statements. So here we understand current assets is less than 1 year because I mentioned this to you. When you look at the financial statements of a company, they will explain these things to you in the notes, stating that we have considered current assets to be less than 1 year, 2 year, 3 years. If nothing is mentioned, we will go by the general assumption that it is less than 1 year.
Okay, okay, understood.
So basically, it
Okay.
is a preface for understanding a company's
Yes.
financial information.
Yes.
Okay,
That is the go-to statement to understand any line item of the financial statements.
got
So
it.
these items, which is cash, accounts receivable, inventories, these are called line items. Okay. Just added information. So we were looking at quick ratio. Quick ratio is your current assets minus inventories divided by current liabilities.
Okay.
Do you have any questions?
So for service based, it would be zero, right? Inventory.
Yeah. So inventories would be zero. So their current ratio and quick ratio would be the same.
Okay.
Clear?
Yes, Mayur.
Yeah. So the final liquidity ratio that we have is called cash ratio. Cash ratio, can someone take a guess as to what cash ratio could be?
Like the ratio of how much cash we have in hand, like
Hmm.
cash plus amount in bank accounts with the current liability.
Yes, perfect. See, you guys are able to decode finance, right? So it's simple. It's cash divided by current liabilities. Everything that comes in the cash divided by current liabilities.
Okay.
Yes, Mayur.
Simple.
Yes.
Yes.
Yes, simple now.
I mean, it has always been simple. It's just that we have to find the right way of learning things. Everything in this world is very simple. Just go with
Right,
that attitude and then you will
Or
learn
maybe the
everything.
right
Yeah.
tutor.
right, mentor. Yeah, exactly.
Okay. So the second part is called as an activity ratio. What is an activity ratio? The activity ratio helps us measure the efficiency of the business. What did the liquidity ratio help us understand?
Like
But if
in case of any unforeseen circumstances, is the company in position to pay off the
repay,
liabilities?
yep.
Yes. So here, if we use the technical terminologies, determining the ability of the company to meet its debt obligation by using its current assets. Overall, whenever a knowledgeable person writes something, he wants to show to the person who is reading that there is some substance here. And one of the easiest way of doing this is to make things complicated. And that is what people have been doing in finance. However, if you break it down to its atoms, the protons, neutrons, and the
Electrons.
electrons, it is very, very simple. Okay, so now we are trying to measure the efficiency of the business. There are these efficiencies, these activities can be identified by turnover ratios. What are turnover ratios? Turnover ratios are ratios where we use sales. Turnover is another term for sales. It is also called as top line. Have you heard of this terminologies of top line, bottom line?
No, I haven't.
Okay. So in general, when it comes to finance, they usually use, if you look at this statement, right? The first line is sales,
Yes.
and the last line is your income or profit.
Okay.
From our sales, we reduce our expenses to come to profits. Yes. No.
Yes, yes.
Yes, yes.
Yeah. So the sales, which is the first line, is called as the top line. The profit, which is the last line, is called as the bottom line. It's
Okay.
as simple
Okay.
as it can get.
Okay. So it
Yeah.
includes taxes and everything.
Mm.
Yeah, after taxes, you remove everything, and then whatever is left is called profits.
Okay.
Okay. So we were at turnover ratios. Turnover ratios are one example is asset turnover ratio. You can see here, this is called asset turnover ratio, which will tell us um, your total assets, divided by sales. Sorry, sales divided by your total assets. Your sales is how many times your total assets. What does this signify? If you are looking at a ratio, and I have given you this ratio where you have sales of 100 and your assets of about 1000, and you got a ratio of 0.1. What does this say?
We are adding something to the asset.
So using the assets, how much revenue can we generate? So like the higher
Yes,
revenue we generate, so it would be better.
yes. Any other question, interpretation?
I couldn't understand.
So we know ratio, right? So in the ratio, there is a numerator and a denominator. So
Yes.
here the numerator is our sales, or also known as turnover, divided by the denominator, which is the total assets. So we as a business, we have been generating a sales of 100 rupees, and we have invested in the assets of about 1000 rupees. Our total assets is about 1000 rupees. What does this indicate? Which gave us a ratio of about 0.1.
So the
Like
sales
our
were
like our capability is like 1,000, but we have sold only 100.
Okay. Anyone else?
So with the help of that 1,000, we were able to make a profit of 100.
generate a sales of 100, you
Yeah,
mean?
generate a sales of 100, right?
Yes. So that is exactly what this ratio says, which is asset turnover ratio. Says that with the help of 1,000 rupees of assets, we have been able to generate a sales of 100, which gives us a ratio of 10%. So we are able to generate a sale of 10% of our total assets. So if you want to increase your profits, what will you do?
Increase the asset
Increase the
turnover
sales part.
ratio.
Yeah.
Increase the assets, and then you will increase the sales by the same ratio.
Mayur, I have one question on this. For how much period of time we will be counting sales?
Sales will, okay. So here, as I mentioned, income statement is prepared for a period.
Okay, now I
Okay.
remember. Thanks.
So that period again, okay, since we are here, I'll just add one more point. That period will be same as this period here. Since we have considered 1 year here, this income statement will also be prepared for 1 year. If this current period is for 1.5 years or 2 years, your income statement will also be prepared for 2 years.
Okay, understood.
And this is called consistency. You need to maintain consistency throughout your financial statements.
Okay.
Okay.
Okay. Yes. So getting back to the question, if you want to increase your sales, you would increase your total assets. Yes.
No, but then the ratio would be
Assets or
same.
sales, total sales, right?
You want to increase your sales. You know, sales happen because of your assets, which have the ability to, so let's consider a manufacturing business. The manufacturing business has some machineries, which are property, plant, and equipment. And you use your inventory where you purchase raw material, convert it into finished goods, and you have finished goods, and you have cash. Okay. A simple asset side of a manufacturing company. Out of these, you use these items to manufacture your inventories, which is finished goods, and then you make a sale. Right?
Yes.
Yes. So using these activities, you have generated a sale of 100 rupees. And all these three things put together, you had a total assets of around 1,000 rupees.
Yes.
Yes. And now we understood that to generate a sale of 100 rupees, we had to invest 1,000 rupees. Or with 1,000 rupees of investment in total assets, we were able to generate a sale of 100 rupees.
Yes.
Yes.
Okay,
So now
so
I want to, yeah, ask.
so it's not basic maths की denominator बढ़ाएंगे तो numerator घटेगा, वो चीज नहीं है.
वो that is our interpretation. वो हमारा interpretation होगा. If I increase my assets, then my top line should also increase
हाँ समझ गई.
proportionately or disproportionately. That would depend. Future is what would give us the right answer. But as a business manager, if I have to take a call based on this information, मैं बोलूँगा कि अगर हम assets बढ़ाएंगे तो then our capacity will increase. Let's say अभी मेरे पास बस एक machine है जिसके with the help of which I can only manufacture so many quantities. But if I invest in another machine, then I'll be able to manufacture more products.
Yeah, or maybe we can see it that way. Like if my asset turnover ratio is 10%, so that means for every 100 rupees of assets, I can generate 10 rupees of sales. So if I want to increase the sale, I need to increase the assets. We are assuming that
Yes.
asset turnover ratio is constant.
Yes.
Yeah, got it. Oh.
And so how do we understand the asset turnover? एक साल में asset turnover can be higher, the other year the asset turnover can be lower. हम एक average लगा सकते हैं. For the last 5 years, what has been the average asset turnover? That will be our efficiency, and through that, we'll be able to make a general understanding.
Yes, Mayur.
Got it?
Yes.
Yes.
Yes, clear.
Perfect. That is turnover ratios. And similarly, using the same logic, You can have receivable turnover, you can have payable turnover, you can have inventory turnovers. सब में यही होगा कि you have sales divided by receivables, sales divided by payables, sales divided by inventories, right? All
Got
of
it.
these things will have the same kind of interpretation,
Okay.
right? The next major ratios that we will look at is called solvency ratio. Solvency ratio tells us the understanding of the business solvency. Remember, in liquidity, we looked at the short term, current assets, current liabilities.
Yes.
In solvency, we will look at the long-term liability. Long-term liability usually tends to be debt.
Okay.
Okay. So in solvency, we will check here. The debt, we saw current liabilities, current assets. Now we're looking at non-current liabilities and shareholder equity. These two parts. We're looking at these two ratios. We have looked at this ratio with respect to sales.
Yes.
समझ रहे? Is it getting complicated? Or is it still simpler?
No, it's still simple. I'm
It's-
able to relate.
It's in the middle.
ठीक है. Just hold on because this can get little. Okay, we'll come back to this. Let's understand profitability. This will be more simpler, then we will get back to this. Profitability, simple. If you have to check the profit of something, you will say net income, your profit, divided by sales. That is your
Right.
profit margin ratio.
Oh, simple.
Yes. What
Yes.
is the value for which you sold? And what is the profit that you derived out of that sale? It's called profit margin ratio. है ना? I'm
Okay.
sure you would have read this as a part of your profit and loss in your quant.
And net income is profit itself, right?
That is profit, yes.
Perfect.
So basically, the net income is a different terminology for profit, similar to how turnover was a different terminology for sales. Okay.
Yes.
Now, another part of profitability is where you compare your profit to your investment, which is called return on your equity. Okay. This is your return. This is also called as return. Multiple terminologies. Like I mentioned,
Yes.
people like to complicate stuff. Profit. This is a profit divided by your equity, which is your investment, which is your net worth. This is your return on equity.
Got it.
ये PE रेशियो जो वो स्टॉक्स में बोलते हैं ये वही है.
PE रेशियो नहीं, PE रेशियो अलग होती है. ये होती है ROE.
Return on equity. Okay.
Yes. Return on equity. Just bring your concentration back. We'll just complete this and then things will become more easier after this. Okay. Solvency में we will check this part. हमने अब तक we have checked almost all the things. हमने current assets देख लिया रेशियो में, current liability देख लिया, नॉन करंट असेट्स भी देख लिया, हमने शेयर होल्डर इक्विटी भी देख लिया, हमने यहाँ पे सेल्स का रेशियो देख लिया, नेट इनकम मार्जिन देख लिया, हमने बस ये नॉन करंट लायबिलिटी पार्ट नहीं देखा है ना? So there's one last ratio through which we will check the non-current liabilities, which is called gearing ratio or debt to equity ratio. Yes, this is the most simplest ratio which says आपके पास कितना लोन है and आपका नेटवर्थ कितना है. Why is this important?
Mayur, can you please repeat on that part?
Yeah. So debt equity ratio is the ratio between your debt, which is non-current liabilities, to the ratio of your shareholder equity or your net worth. Why is this ratio important?
दिस इज इम्पोर्टेंट क्योंकि अगर किसी पॉइंट ऑफ टाइम पे कंपनी के पास ऐसा नहीं होता है तो आर दे इन अ सिचुएशन टू रीपे द लोन विद द करंट वैल्यू दे होल्ड, इज इट सो?
Close, very close, very close.
It shows my ability to pay the debts, like all the long-term liabilities.
Not necessarily ability, but personal life के लिए try to correlate it to your personal life. Let's say you have your net worth of 100 and you have a loan of 200 rupees. What does this show? Or you are trying to give a loan to someone, and that person's balance sheet is something you're checking, and in that person's balance sheet you see that the person has 200 rupees loan, but his net worth is only 100 rupees. Would you be willing to give a loan to such kind of a person?
No, no.
नहीं.
हाँ, ये वही
हाँ, बताओ.
ये जो हम बोलते हैं कि उसका क्रेडिट कितना है, लाइक वी एनालाइज इफ he or she is sound enough to be given a loan, ये हम वो
Yes,
चेक करते हैं. Okay.
yes. So हम basically that is called solvency. Will the person be in a solvent position, or will he become insolvent? Is he having too much on his plate? वो check कर रहे हैं. If a person has more than the if a person has loan which is more than the amount that he has already invested in, usually that is not a good thing. However, there are some industries which primarily run on huge loans, and it is still okay if they are able to generate enough cash. तो पहले पार्ट पे हम ये चेक करते हैं कि अरे हम किसी ने आके हमारे पास पैसे मांगे हैं, and we looked at his balance sheet and we see that his loans are 200 and his net worth is 100. So we were little scared, but he said अरे आप तो बस एक पार्ट चेक कर रहे हो, एक और पार्ट है which is called coverage ratio. ये देखो, मेरी P&L देखो, यहाँ पे my gross profit, which is my sales minus direct cost. We will come and learn direct cost also in the small time further. आगे slides में वो भी आ जाएगा कि see, I am able to generate huge amount of profit. My cost is very, very low to manufacture, and I am able to generate very high margins of profits. And with that profit, I will be able to easily give you your interest and principal back. Then we see that he's able to generate huge profit. यहाँ पे interest coverage में, this is called interest coverage ratio. Okay.
What
Interest
would be on
coverage,
the numerator? Sales minus direct cost, and denominator?
interest cost.
Okay.
So my profit, gross profit, जो यहाँ पे है, gross profit divided by interest, या operating income divided by interest expense. So the person is saying that, see, my operating profit of my business is literally 20 times, 30 times the interest that I'm paying to you. So you don't have to worry about the 2 times debt that I have. I have enough capability to repay the interest and principal to you. So would you be convinced to give the debt right now that you have this additional information?
Yeah, it can be considered in that way.
Yeah, like
है ना?
my view would be slightly like positive towards the person.
Yeah. Huh. So that is what this solvency ratio says, which is long-term viability of the company. Will the company be able to sustain the long run, in the long run? यहाँ पे हमने short run पे देखा था liquidity पे. Here we are looking at the long run. Yes.
Yes.
Okay. This marks the end of ratios. Let's do a quick revision. है ना? anyone wants to take up the responsibility?
Maybe you can ask questions and we'll keep answering.
अरे क्वेश्चंस प्रिपेयर करने के लिए भी टाइम लगता है.
अच्छा, तो what sort of revision, मतलब कैसे?
ठीक है. I'll just run through the slides so that we quickly recall what are the things we just covered. पहले we started with assets equals equity liability. We correlated this to our personal life, जहाँ पे हमने देखा कि हमारी assets कौन सी है, हमारे पास कौन सा liabilities है, and the balancing figure of assets minus liability जो equity माना जाता है कंपनी के लिए, हमारे लिए वो net worth है. For company
Yes.
also you can use. हाँ बताओ.
No, I'm saying I agree to this. Yes.
Yeah. So for company also you can use the same word called as net worth, but use equity for having more clarity of thoughts. Next, we understood कि from that accounting equations, we can come out with some financial statements. Balance sheet, income statement, cash flow statement are the three primary financial statements. In addition to this, there is another statement called notes to accounts, which gives in-depth explanation to each line item of the financial statements. Then we looked at balance sheet. Balance sheet has two categories. One is asset, the other is liability. Now, asset and liabilities both are subcategorized into current and non-current. Current assets and current assets is something which can be converted into cash in less than 1 year. Current liabilities are something which is expected to be paid within 1 year. Non-current assets is exact opposite of current asset. Anything which is not current asset is a non-current asset. Anything which is not current liability is a non-current liability. And the other balancing figure is shareholder equity or the net worth. Next, we looked at the income statement. Income statement is usually prepared for a period of time. Balance sheet is prepared for a point in time. As on a particular date, income statement is for a particular period. As mentioned, it is for year ended, मतलब एक साल के लिए. In the income statement, we have revenues, we have expenses. We understood that the expenses can be of two nature. One is of capital nature, the other is of revenue nature. Capital nature expenses are usually assets and they form a part of balance sheet. The other expenses which form a part of day-to-day activities and are not capital expenditures are revenue expenditures, and they form a part of income statement, which helps us arrive at the net income or profit or loss, as the case may be. Cash flow statement has three broad categories. Cash flow statement में it only shows the transaction or movement of cash. There is no non-cash item which happens in the cash flow statement. One main distinction between income statement and cash flow statement is income statement may have non-cash items, but cash flow statement will have only cash items, and you can know the cash profits of the company. Cash flow statement is divided. Yeah.
Can you give an example of this कि जो in income में नहीं है और cash में, या cash में है income में नहीं है ऐसे?
Okay, simple. The most easiest example is where, let's say you make a sale, you know credit sales.
Hmm. Hmm.
Credit sales matlab you take the goods now, you say you will pay later.
Okay, हाँ.
So you have made the sale, but you have not got the cash. That sale will appear in income statement, but that sale will not appear in cash flow statement because you have not got the cash.
Okay.
Got it.
So those are minute things. The other classic example is depreciation. This is a new concept. Are you guys aware of the word depreciation?
Yes.
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 Okay. So depreciation is the loss in the value of fixed assets due to value of time, effluxion of time or use or obsolescence. Obsolescence is technology change. So depreciation appears in income statement, but depreciation is not a part of cash flow statement.
Okay.
Yes. So continuing the revision, cash flow statement has three categories: operating, investing, financing. Operating activities are our day-to-day activities. Investing activities are a part of our investments, usually non-current assets. Financing activities are a part of sources of our funds. From where do we get our money from? That is either shares or loan or debt or bonds or any such activities. The other important thing that we learned was if a particular transaction or activity forms a part of investing activity, a subset of that activity will also form a part of the main activity. For example, if we have made an investment into fixed deposits, the interest from fixed deposit will also form a part of investing activity.
Yes.
Yes,
Got it.
Yes.
perfect. Then we entered ratio analysis. Ratio analysis is a method or tool used to understand the financial health of the company. We understood short-term strength of the company by using liquidity ratio, which was current ratio, which is current assets by current liabilities. Then we understood the efficiency at which the company operates by using turnover ratio. One ratio which we analyzed was asset turnover ratio. Then we went on to understand the profitability of the company. Does the company have the ability to earn profits through profit ratio, which is profit by sales, profit margin ratio. And another profit ratio that we checked was profit divided by equity, which is return on equity. And
Yes.
finally, we looked at solvency or the long-term strength of the organization by looking at debt to equity ratio and interest coverage ratio.
Okay.
Yes,
Yes.
Yes.
perfect.
Yes.
Nice. That was a part of our financial accounting part. Now we are looking at something called as time value of money, which is a part of corporate finance. Do you want some break or something? Is it too heavy, too light, going good?
I think it's going good. We can continue.
Yes, we can
Everyone?
continue. Yeah.
Perfect. The next part is time value of money. Time value of money states that a sum of money today is worth more than the sum of money in the future due to its earning potential. Right?
Yes.
Do all of us agree with this point?
Yes.
Yes. Why do we agree on this point?
So there are various factors. Like suppose I have 10 rupees today and 10 rupees in say 10 years from now. So both the
Mhm.
10 rupees would not fetch me same things. Like आज 10 रुपए में 10 टॉफी ला सकता हूँ, उस टाइम पे 10 रुपए में शायद
Mhm.
2 ही टॉफी आए। दूसरा
Mhm.
आज 10 रुपए को मैं कहीं और इन्वेस्ट कर सकता हूँ, सो मे
Mhm.
बी इट इन फ्यूचर इट विल बिकम 20 रुपीज, बट अगर वो
Mhm.
फ्यूचर में 10 रुपए है तो वो 10 रुपए ही है, तो वैसे।
Mhm. Exactly. So as clearly mentioned, आपका नाम क्या था? मुझे sorry, I'm not
अभिषेक,
able to.
अभिषेक।
Yeah, as Abhishek mentioned, clearly mentioned, that is what time value of money is all about. Time value of money is a very important concept for business because this is a concept which will be used in a lot of projects. Like, for example, if you have to determine investment into a particular project, when let's say, for example, you are in a business finance role and you have to analyze what is the viability of a project. What will you do? You will identify what is the cash that you have to pay today, what is the cash that the project is expected to generate in the future, and then you realize that the money that is generated in the future does not have the same value that is being spent today. So that is when you will say, okay, अब इसको एक ही line पे और bring it to the same base. We bring all the money to the same base. That is the concept of time value of money. And I'm not digging deep on this concept because it's a part of our compound interest, simple interest subjects in our CAT syllabus, right? Do you guys recall the concepts?
Yes.
Yes.
Perfect. I am hoping the two guys who responded speak for the whole. And main principles of time value of money is money can earn interest, there is inflation, and there is an opportunity cost. What does the opportunity cost mean? Like Abhishek mentioned, the 2 points, these 2 points is something which he already covered, where if I put this money in the bank, it generates interest and it would be a higher value tomorrow. And inflation is today for 10 rupees I may get 10 toffees, but on a later date 10 rupees may just generate 2 toffees to me. Opportunity cost ये है कि I am foregoing my happiness. If I had 10 rupees today, I could have spent it on toffees or anything that I like, and I would have generated a pleasure to myself. No, I'm foregoing this pleasure. So I should be compensated for that. That is opportunity cost.
Okay.
The other concepts of time value of money is future value. You calculate future value using the compounding method, which is taught in compound interest. To calculate the present value, you use the discounting method, which is exactly opposite of compounding. Can someone quickly tell me the compound interest formula?
Uh, like the final amount that we would be receiving would be like principal into 1 plus r raised to power 1 plus r by 100 raised to power n.
Yes. So that is future value is equal to present value into 1 plus required rate of return to the power number of periods. Yes?
Yes. Got it.
Yes. Annuity is a series of equal cash flows occurring at regular intervals. Perpetuity is a type of annuity that continues indefinitely. For example, dividends. Are the concepts clear?
Sir, like when we are like raising money or funding for a company, we consider future value or like present value.
So you are going to answer me this question. When you are raising money, there are multiple activities which take place. First activity that take place is you are getting money from the lender. What is this? Is this a present value or a future value?
It is present value, like as of
Yes,
now.
perfect. So now that you have received the money, you are investing this money into a project.
Yeah.
And once you invest the money into the project generates income.
Yes.
That income is present value or future value?
Future value.
Yes. So now you have a future value and you have present value. Are they both on the same timeline or do they have the same base? Can you compare them directly?
No, like not on the same days. You can't compare
Yes.
exactly.
So you either bring the present value to the future value or the future value to the present value.
Okay. Like even if we see in the Shark Tank, like if they are raising money, they will consider like after 1 year valuation of the
Yes.
company. That's why.
Yes.
That's the reason.
Yes. Exactly.
Okay. Okay. Thank you.
Anyone else? I will assume silence as acceptance. Okay. So the applications of time value of money can be used in investment valuation, bond pricing, retirement planning, capital budgeting, loan amortizations. Again, not going in depth, just giving you a glimpse of these things so that if you're interested, you can go and check on these things. One important metric of time value of money is called net present value. Net present value, as we have already discussed, is the method of calculating all the cash flows to present value. So there is cash inflow, there is cash outflow. As we discussed, present value, there is a cash inflow, which cash outflow, which is happening for the investment into the project. And then there is cash inflow, which is happening through the revenue that is generated from the project. So the inflows are happening at a future value. So we bring them to the present value, which is termed as present value cash inflow. And the cash outflow, which is already happening at present value, will be mentioned as present value cash outflow. Now, once we have both at present value cash inflows minus present value cash outflows gives us the net present value. Yes.
Yes.
Any doubts?
No, it's clear.
Mhm.
Okay. Internal rate of return, the IRR, states that the discounting rate which we use to bring future value to present value, which is future value is equal to, in the compound interest formula, future value is equal to present value into 1 plus r whole power n. The r which we are using, that is what we are trying to determine using IRR, where by using this particular rate of return, the net present value will turn to 0. Yes.
Sorry, can you please repeat on this?
So let's say we have a required rate of return. Let's say by investing into the project, you have, if you don't invest into the project, you can definitely put your money into a fixed deposit and you can generate about 6 to 7% return. So you will discount your project at 6-7%.
Yes.
Yes, future value to
Mhm.
present value. And then you got an NPV which says about 100 rupees.
Okay.
Okay.
Mhm.
Now, if I want NPV to be 0, what rate of return should I use? To answer this question, or the answer to this question is called internal rate of return.
Okay, the rate at which NP would be 0.
Yes.
Mhm.
Okay.
Yes.
Everyone?
Yes.
Oh. There's another method which is called payback period method, where it is the time required to recover the initial investment. Let's say you have invested 100 rupees today. By when will that 100 rupees get recovered? This is again a concept without discounting. There can also be a discounted payback period. This is a non-discounted payback period. But so let's say we have invested 100 rupees today, and in 1 year from now, we'll recover 70 rupees. And in the next year, we'll recover 30 rupees. So the payback period for this investment would be 2 years. Yes,
Yes.
perfect. A discounted payback would be using the discounting method to arrive when or through what period would the investment be recovered. Okay.
Okay.
Yes. Now coming to costing and budgeting. First is costing. Costing is the process of determining the total cost involved in producing a product, providing a service, or carrying out an activity. It helps in decision making, cost control, and pricing. Let's say you are asked to give me some service. I ask you to do some work for me, right? So if I ask you to do some work for me, I'll ask you to quote a price. How will you do that?
So I'll be like looking at the various factors that goes into providing that service to you, and basis
Hmm,
that I'll be like. So now I have the cost, and also want to make some money out of it. So I'll add this to uh,
profit and
the
cost.
cost. Yeah, profit plus my expense, and then I'll be quoting it to you.
Right. So costing is that process where we understand what are the different costs involved to provide the service to you. We will include profit at the end. Excluding the profit, looking at every other activity or product with every other item which is involved in manufacturing or providing the service. That is called as costing. So to determine this, there are three broad elements of costing. One is the direct cost, one is the indirect cost, the other is overheads. Direct costs are costs that is directly associated with the product. For example, if you are manufacturing a water bottle, the direct materials and the direct labor which is involved in manufacturing this is called the direct cost. Can you state any other examples?
For making a book, the paper, the labor, and the glue
Yes.
and the threads, that would be direct cost.
Perfect. Perfect. For indirect costs, the cost not directly tied to the production. Can you take a guess on this?
License.
Logistics.
Mm, more clarity on it.
Taxes.
Taxes are not our costs.
Okay.
Indirect
The
costs,
facility, the machinery, will they be counted indirect cost? The electricity and everything.
Maintenance.
yes. The electricity, the rent, the water, these are our indirect costs. They are not directly tied to the production, but you cannot produce without these,
Okay.
such as rent, electricity, and other expenses. The next part of next element of costing is called overheads. These are also indirect costs that include manufacturing, administrative, and selling expense. Clear? Basically, selling promotion activities. Or if it is a manufacturing activity, the office activities, they are not directly related to manufacturing, but they are overheads. They are not required for manufacturing at all. Whereas electricity is needed for manufacturing, the rent is needed for manufacturing. It is not directly involved. Overheads are again not directly involved, and they are not even needed, but it is incidental that is needed for the business to run.
So if I understand correctly, the difference between indirect cost and overhead cost, like indirect costs are still related to manufacturing. Like without them, we cannot manufacture. But
Yes,
overhead costs are something without them we can manufacture, but they are required to make sale
run the
or
business.
run the business.
Yes,
Yeah.
Fuel the
yes,
business.
yes,
So
perfect.
marketing costs.
Yes, and finance department also. It's not needed to manufacture the product, but it is
Uh,
needed to help them take some decisions. So those are overhead.
I mentioned license fee. So where it would be coming? Overheads?
Without license fee, can you manufacture the product?
No. Okay, indirect
So
cost.
yeah,
Okay, okay.
the types of costs. There are fixed costs, there are variable costs, there are semi-variable costs, there is an opportunity cost, and there's a marginal cost. What does a fixed cost mean? It's already mentioned on the slide, so you guys can read and take answer.
Okay. So so you want us to answer what would be fixed cost, or like you just want us to
Yes,
read?
I want you guys to answer.
Okay, so fixed cost would be salaries and rent
Yes,
and electricity.
yes.
No, that would be variable
Electricity.
maybe.
Yeah. Fixed costs are those costs which do not change, irrespective of the level of production. So
Like
let's say
rent.
if we are, yeah, someone trying to say anything? Okay. So fixed costs are those costs which do not change with the level of production. For example, rent. Let's say you are during COVID period, a lot of factories were shut down because of the lockdowns. But did the rent change at that point of time?
No.
It did not change. So these expenses are not dependent on your activity or manufacturing. So they are constant. They keep occurring irrespective of whether you like it or not. Those are called fixed costs. Now, contrast to these fixed costs are variable costs, such as raw materials. Unless you produce, you would not need to spend on raw materials, right? So those are
Yes.
variable
Yes.
costs.
But if we increase our production, we need more employees, more workforce. Then how can
Yes.
salary be the same?
So even if you increase your workforce, that is a one-time activity, right? And let's say this time you increased your workforce because you expected a higher production. Would you do the same thing every year?
Not necessarily.
And let's say next year you reduced your production, will you just slack your employees?
maybe.
If you do that, then you would be a bad businessman and you will have a bad reputation. This is where the planning comes into picture, which is the next part of
Companies do
budgeting,
this now.
which is where budgeting comes into picture. And those companies have a bad reputation if they continue doing slacking employees and then hiring new employees. Those companies will not generate a trust in the eyes of customers and stakeholders,
Okay.
right? So that is why it is considered as fixed expense. Yes, you are right to an extent where employees are not constant, it keeps changing, but the change is not very as visible as the variable costs are. That is why it's generally considered as fixed,
Okay. Okay. Got it.
right? Now, a culmination of these two things is called semi-variable cost. For example, electricity. If you have looked at your house electricity bills, there is a fixed charge and then there is a variable charge. They say you have to pay minimum 100, 150 rupees. And based on your consumption, if it goes beyond a particular consumption, you will have to pay the variable rate. Yes. Have you guys looked at your electricity bills of your home? Electricity,
Yes.
water, or
Yeah,
any
yeah.
bills?
Mm.
So there it says you have to pay minimum uh, payment, minimum bill amount, and then there is also a variable amount which is based on the number of units consumed.
Yes.
That is your semi-variable cost. The next type of cost is called as an opportunity cost. As earlier mentioned, opportunity cost is where you did we mention opportunity cost earlier? Yes.
Yeah.
Opportunity cost is where you have foregoing your present consumption for this. So you should get at least that amount of benefit. In the words of finance, the cost of foregoing the next best alternative.
Okay.
Yes.
What can be the example of opportunity cost?
Okay. So last time I mentioned that let's say you have 100 rupees with you and you have an opportunity to invest in a project. However, if you don't invest in the project, you can invest this amount in a fixed deposit for 6 to 7% interest rate. So the minimum that you would expect the project to provide you is the 6 to 7% interest rate, which you would have otherwise got. Yes.
Oh, okay. Okay. Yeah.
Oh. And then there is marginal cost, which is the additional cost of producing one more unit. So as mentioned, who was the one who asked for the salary? We would slack, we would hire more. I'm not sure of your name. So
Yeah.
what happens,
Me. Priyansh.
Priyansh?
Yeah.
Yes. So, like you mentioned, we will analyze this by the concept called as marginal cost, where let's say currently you have the capacity to produce 100 units. And to produce one unit, if you produce just one unit, you put all the fixed cost to that one unit, you put all the variable cost of that one unit, you put all the semi-variable cost to that one unit, and let's assume that the cost comes out to be 100 rupees, right? Now, if you produce one more unit, that is, you start producing two units. Now, fixed cost divides between the two units. Your variable cost will be constant and semi-variable cost also will get divided between two units. So the cost of producing one additional unit will reduce.
Okay.
Yes.
Yeah.
That is called as marginal cost. Marginal cost is where we are trying to understand the additional cost that we would involve, which we would incur by producing two products. We are definitely leading or transitioning into a better position than what we were when producing just one product because the costs get distributed. Yes.
Yeah.
Yes,
Okay.
but like, would it give the right picture? Suppose my machine's efficiency is like 1,000 units, and I'm looking at
Mm.
producing one more unit, so that would require me some space for the new machinery and the new machinery.
So now
No,
this,
one machine has the capacity to produce more.
okay, when I already have the capacity to produce more, then this concept would
Yes,
come into picture.
yes,
Okay.
yes. Even when you consider you want to purchase another machinery, you will input all these factors into consideration and say, to produce one more unit, what would be my marginal cost?
Okay.
What is the benefit?
Mhm.
Okay. Now, the process of budgeting. Budgeting is a process of creating a financial plan that estimates the income and expense over a specific period. Remember, we prepared an income statement
Yes.
way back about an hour or two ago.
Yes.
Yes. Now we will project the income statement for the next year. We will project what are our sources of income, what will be our sources of expenses over a specific period of time. That is called budgeting. Do we do this at our home? Do we do this planning budgeting for our
Yes.
own self? What are
Yes.
the steps that you usually have?
So I look at my consumption for a month and then some
Mhm,
buffer amount,
mhm.
and so that would be like, and then I compare it with my income. Like
Okay,
how
that's
Basically,
much
good.
part of my income would go into this, and then I would maybe add some investment goals. So that would come under budgeting part.
Perfect. Yes.
we look at the previous month's expense and
Mm,
the expense and the income, and then create
mm,
a budget or foreplan key if there's a specific event or something, and it would
mm.
require something extra. That's how
Yes.
we.
Perfect. Perfect. You guys clearly conveyed everything, just that it was here and there. The steps is you have a specific goal. You're creating a budget because you want to ensure that you don't overshoot your incomes, right? You're preparing a budget so that you have a, like you mentioned, there is a particular event or something, and you are estimating what would be the expenses, what should be the income, what should be the sources, right? So those are your goals. Once you have this goal in your mind, you do the next step, which is forecast the income. Your goal is not to overshoot your incomes and end up with a decent profit in hand. Then you forecast your incomes. What are the different sources from which you expect an income, revenue source to come in? Then you estimate your cost. What are the sources where you are expected to spend? Then you detail all these things in a different time period. If you're doing it for just one period, then you would, for 1 month, then you would put it for 1 month. But if you're doing it for a year, then you would do it for every month. What would be the income and expense? That is called preparing a plan. And then after the end of each month, you compare it with the actuals and you see what is the difference. And then once you look at the difference, you realize, oh, this is something that I had not considered, and you revise your budget for the future period. Yes?
Yes, yes, got it.
Yes. So this is our
Yes.
budgeting process. Um, some of the objectives include allocate resource efficiently, control costs, manage cash flows, set financial goals, track performance, support decision making. These are just the some of the key objectives for budgeting. In budgeting, there is also one analysis which is very important called break-even analysis. Specifically, when a company launches a new product or there is a new startup, they usually have a lot of costs in the beginning, little to no revenues and lot of costs. So it is very important for an organization to understand by when will they break even. Can
Yes.
you take a guesstimate, or can you try to guess what a break even is? How would you calculate a break even?
So if I invested in a business, say amount of 1 lakh, and
Hmm.
then the profit I would generate from the business, when this amount would be equal to 1 lakh. So my capital amount I am like earning back from the business. Now this has been paid off. Now all the profits would be pure profits to me.
Yes. Yes. Perfect. Any other example?
I could not get hold of it. Can you explain once again?
Yes. So let's say you have invested in your business about 100 rupees, right? Now you invested in the business 100 rupees, you manufactured the product and you start selling. You made your first sale and made 10 rupees profit. You made your second sale and made again another 10 rupees profit. So this way you continued making sales until you made a sale of 10 units. You will not recover your investment, right?
Yes. Okay.
So your break-even point is the sale of 10 units. Until you make a profit for 10 units, you will not break even from your costs.
Got it.
Yes. So your break-even point is that point where your cost and income matches. You will have zero profit and zero losses. The moment
Yes.
you make the 11th
Okay.
sale, all the revenue is your profit because you've recovered your overall cost.
Yes. Got it.
Got it? That is called break-even analysis. And that is one important concept in costing and budgeting. Okay.
Okay.
Next. Okay, coming to one more important and interesting topic, which is called investments. We'll not dwell too deep into this topic. It is a huge ocean in itself. So we'll just talk about few things. A lot of us kept on talking about investment, trading, shares when we discuss balance sheet. So let's just understand different types of investments that can happen. Investment is the process of allocating money to an asset or financial instrument with the expectation of generating return. The return can be either income or capital appreciation or both. Clear?
Clear.
Yes. So what is an asset
Yes.
or a financial instrument? A financial instrument is equity, which is stocks, bonds, or debt. An asset is your real asset. Commodities. Can you give an example of commodity?
Yeah, like
Silver, gold.
Hmm. Yes. Yes. Perfect. It's already mentioned here. You guys saw and read
Yes.
it, is it?
no, we can
No,
add like
I knew it.
shoes and like sneakers also in commodities.
Yeah, like rice. You can trade rice or any agricultural product also.
Okay.
Hmm.
Everything is a commodity, basically.
Yes, perfect. Then there are also mutual funds. Do you guys have any investment in mutual funds?
Yes.
What is a mutual fund?
So there's one person or organization which manage the funds for us. So they earn some part, like they take some fees and invest money on my behalf.
Yes. Have you
Pool of
guys heard of
stocks. Yeah.
ETFs?
Yes.
Yeah, yeah, I have.
Can you expand ETF?
So ETF is like a basket of few stocks.
Mutual fund is also a basket of few stocks.
ETF. 1 second. Let me
ETF is like
remember.
I've seen Nifty, Bees. It is ETF, so it is
Yes.
bunch of companies. I don't know the exact, but it is kind of similar to mutual funds, but it is like the like Nifty, Sensex, these kind of.
So there are index mutual funds also.
Yeah, 1 second. मुझे याद है बट मैं एक्सप्लेन नहीं कर पा रहा जैसे एक निफ्टी 20 है जैसे निफ्टी में जितने भी स्टॉक्स है उन सब का एक
Hmm.
वैल्यू बना देंगे एंड देन
Hmm.
once one unit would include respective amount of these stocks ऐसे ETF
Hmm.
होता है
हाँ, तो म्यूचुअल फंड भी ऐसे ही होता है. म्यूचुअल फंड कैन ऑल्सो बी ऑन निफ्टी 50 stocks. Mutual fund can be beyond Nifty 50 stocks. There is a Nifty 50 index mutual fund also. and there is also Nifty Bees. Difference क्या है इन दोनों में? Why do we have a mutual fund and a ETF?
ओके, म्यूचुअल फंड्स में जो पोर्टफोलियो है दैट कैन बी चेंज्ड, लाइक जो मैनेजर है दैट वुड लुक इनटू मार्केट का जो भी व्हाट डू आई से एटीट्यूड होगा उसके अकॉर्डिंग ही वो स्टॉक्स की जो पोर्टफोलियो है वो चेंज करता रहेगा, बट ईटीएफ्स में इट वुड रिमेन कांस्टेंट, जो है एक बारी में वही रहेंगे।
ये आपने कहाँ से पढ़ा?
ये मुझे याद आ गया, मतलब मैं म्यूचुअल फंड में भी है
वही तो
और
पूछ रहे हैं वो कि म्यूचुअल फंड भी तो निफ्टी वाला ही बोल रहे हैं, तो फिर वो चेंज कैसे करेंगे जब निफ्टी के
एग्जैक्टली
हिसाब से ही म्यूचुअल फंड है तो।
हाँ okay I'll just answer. So ETF is expanded as exchange traded funds. Mutual funds, agar if you want to buy or sell a mutual fund, you will trade a mutual fund after the end of the day. After the market closes, you will get an updated net asset value, and you will trade based on the net asset value. Whereas exchange traded funds, you can trade during the market open hours. Like a stock or any other traded instrument, you can trade
Yes.
exchange traded funds in the exchange during market hour. Mutual funds will usually get settled post market closes. That is the main difference.
That's why the mutual fund portfolio updated after one day. Like
Yes,
that's what I've
yes,
seen.
yes.
Okay.
Okay. So बस ये है. Investments are done. Do you have
एंड
any questions on investments?
ईटीएफ में वो चेंज होता है क्या, जैसे स्टॉक्स हैं मतलब वो
Yeah.
चेंज होते रहते हैं?
हाँ, तो exchange traded funds, ETFs, you can trade during the market. You can buy and sell an ETF within the same day. But
ओके
mutual funds are not traded intraday. It is traded
ओके
only at the end of the day.
ओके ओके।
Any doubts or
ETFs
questions?
can be left for for it being traded the next day also.
Yes, you can buy and hold also.
Okay.
Hmm.
It is just like a stock of a company. ETF is
Yes.
similar to that, yeah.
Anything else?
No, it's clear.
Okay. So now on the lines of investments is something called as financial markets. Financial markets they are like a platform where the buyers and sellers of financial assets meet and trade. What are financial assets? Financial assets are stocks, bonds, currency derivatives, etc. Types of financial markets: there is capital markets, which will include equity and debt. There is money market for short-term debts. There is foreign exchange market. There's a derivative market. There's a commodity market. Again, going on the same lines as investments, we are just touching on different topics. If you are interested, you can go deep, and if you have any doubts, you can definitely reach out. We will all help you. But this is just so that you have a good understanding of what finance totally encompasses, right? Capital markets are like our stock market where we trade. Money market generally not available for retail traders. We will understand the different types of investors in the next slide. Generally, we cannot trade in the money market. However, Zerodha has come up with a new option where we can also invest in the money market, or we can get access to the money market instruments. Forex are where you can trade in the foreign exchange currencies: USD dollar, USD euro, USD INR. These are the types of currencies which you can trade in Forex. Derivatives instruments are like your futures and options. One of you took a daring step of mentioning some options while we were mentioning financial balance sheet. Do you want to take the daring step again?
I think he dropped off.
Acha. Okay, no worries. Then there is commodities, which are raw material or primary product, like gold, oil, etc. Then who are the players in the market? Players in the markets are retail players. Retail players are usually you and I who trade in the market. Then there is institutional traders, which is mutual funds. Then there is corporations, who are the people who issue shares. Like Reliance has issued shares. They come up with an IPO, they come up with a follow-on public offer. Then there is government. Government can also hold a stake in the organization. There are intermediaries like brokers, clearing agents, etc. And then there is regulator, which is SEBI. Can you tell who is the regulator for US?
US में I'm not able to recall.
Anyone else? It's called
NASDAQ.
Securities Exchange Commission. No, NASDAQ
Oh,
is the
okay,
market.
platform. Yeah, okay.
Yeah.
Uh,
So
can
in
you
India,
SEC? Yeah,
yeah, SEC, Securities Exchange Commission.
suits में सुना था.
हाँ. So in financial markets, again, there are two broad market index. Market index is nothing but a basket of stocks to represent the Indian market or an industry. Okay. Nifty
Yes.
50 is one basket, Sensex is another basket. Nifty 50 is the top 50 companies in the Indian stock market, specifically National Stock Exchange, based on market cap.
Okay.
Okay. Sensex is top 30 in the Bombay Stock Exchange.
Sensex is top 30.
Yes.
Okay.
एक बार ऑनलाइन जाके ये भी चेक कर लेना कि these are some general questions like superficial answers which everyone should be common. This should be a common knowledge for all business students.
Mhm.
Okay. And then we enter the banking sector. Again, I hope banking would be covered in economics. Banking covered in economics?
Not yet.
No?
I'm not sure if it would be covered there.
Just a second. Huh? General types, accounts, ratios. No?
I had economics. I thought I came across accounts like saving account, current account, but not banks or loans. Probably because it was an elective, so just studied for a semester.
Okay, so I'll just touch upon them then, and then this is the last topic for the day. There are four different types of banks: commercial bank, central bank, cooperative bank, and investment bank. Do you know the difference between these banks? What is the difference between these banks?
कमर्शियल बैंक जैसे हमारे यूनियन बैंक है या फिर HDFC है. सेंट्रल वुड बी RBI.
RBI.
Yes.
कोऑपरेटिव वुड बी लाइक जिसमें ओनर्स मतलब किसी इट्स नॉट लाइक कमर्शियल बैंक. इसका एक पर्पस होता है कोऑपरेटिव बैंक का, लाइक टू प्रमोट फार्मिंग के लिए रिस्पेक्ट में अगर हमें लैंडिंग इंक्रीज करनी है टाइप.
Perfect.
इन्वेस्टमेंट बैंक आई थिंक नॉट श्योर क्या होगा.
Okay.
नेशनलाइज्ड बैंक जो भी हमारे पहले बैंक थे उन
एक
सबको
सेकंड,
नेशनलाइज.
नेशनलाइज्ड बैंक नहीं जा रहे हैं अभी, बस
ओके
ये
ओके.
4 ही है. Anyone else wants to take a guess on what investment banking is?
So you basically put up your money that can be used again, मतलब आगे किसी और को दे सकते हैं आप लोन के लिए.
आई वांट टू टेक अ गेस ऑन दिस. लाइक बिग बजट्स जो होते हैं, जैसे बिग बजट प्रोजेक्ट जो होते हैं, उनको इन्वेस्ट फंडिंग के लिए जो बैंक्स होते हैं, आई थिंक वो
Very
इन्वेस्टमेंट
close.
बैंक होते हैं.
Very close. Yeah. So like you mentioned, commercial banks are the most common banks where you and I transact, जो deposit accept कर सकते हैं, loans दे सकते हैं. Central bank is the RBI, which is the ruling guiding bank which guides all the commercial banks. Cooperative banks, as mentioned, is there for a purpose to help a small community or a cooperative to meet their financial needs. Investment banks are banks which help people with money make investment or meet people who are in need of money. Specific purpose है इनका to bridge the gap between funding and lending. Then there are different types of accounts: savings accounts, current accounts, fixed deposits, and recurring deposits. Sure, you guys are aware of what these means.
करंट अकाउंट और सेविंग में क्या डिफरेंस होता है? मतलब
Current account or
सेविंग अकाउंट में, सेविंग तो जो हम बेसिक यूज करते हैं, करंट में मतलब क्या डिफरेंस होता है एग्जैक्टली मुझे नहीं पता.
anyone wants to take the answer?
I think it's based on कि आप करंट में पैसा निकाल सकते हो, बट सेविंग्स में आप तुरंत नहीं निकाल सकते. देयर इज अ फिक्स्ड पीरियड ऑफ टाइम.
नहीं. Current account is generally for businesses and savings accounts is generally for individuals. An individual, unless he has a business, cannot open a current account. The other benefit of current account is where you can withdraw more than your saved amount for a small period of time
And
based
there
on your
would be
agreement
difference in
with
the
the bank.
interest rate as well.
Yes, there's also a difference in the interest rates. Yes,
करंट
current accounts
अकाउंट
usually
में
have,
लोअर इंटरेस्ट
yes,
रेट. Okay.
usually would have a slightly lower interest rates. Fixed deposit, recurring deposits तो हमें पता है. पता है.
Yes.
What is recurring deposit?
So I'll be investing some money every month और उस पे इंटरेस्ट होता जाएगा.
Yes. Okay. And then there are different types of loans. These are savings account, current accounts, fixed deposits, recurring deposits. ये banking के लिए asset है या liability है?
जो अमाउंट डिपॉजिटेड है वो लायबिलिटी है.
Hmm. Anyone
और
else
जो
have?
लोन्स उन्होंने डिस्ट्रीब्यूट करे हैं दैट वुड बी एसेट्स फॉर देम.
Yes. Anyone has a different take on this?
I couldn't understand concept.
Yeah. So savings account, current account, fixed deposits, recurring deposits. These are the amounts which we deposit to the bank. है ना? So
हाँ.
when bank receives this money from us, bank has an obligation to repay this back to me when I go and ask them, right?
Yes.
So that is why
Okay.
this is a liability for the bank.
Liability. हाँ, got
हाँ.
it.
जब banks loan issue करती है, I am taking the money and the bank has a ability to ask back for this money.
हाँ, तो ये एसेट हो गया उनका,
ये
current
asset हो
assets.
गया. हाँ.
हाँ.
That is what we were trying to understand. So there are different types of loans: personal loan, home loan, business loan, auto loan. I'm sure the name is self-explanatory कि what these loans mean. However, यहाँ पे मैंने लिखा unsecured, secured. Do you guys know what is the meaning of unsecured or secured loan?
So there is no security against that particular loan. Suppose personal loan में I'm using credit card, so I'm not
Hmm.
putting any security against that amount. So that would be
Yes.
unsecured. But when I'm buying a home loan, I need to place some security of equivalent value to have that loan passed. So that's why it's secured. If in some unforeseen circumstances I'm not able to pay back that amount, then bank has some leverage on me, and then they can sell that
10 minutes.
security and then
Okay.
recover the money.
Perfect. Everyone understood?
Yes. So basically आप कुछ स्टेक पे रख रहे हो, अगर आप
हाँ.
लोन नहीं repay कर पाते हो तो वो चीज वो आपका ले लेंगे, जब्त कर
Yes.
लेंगे.
Technical
Yes.
word would be collateral, right?
Yes.
Okay.
Perfect. What is a nationalized bank?
Earlier, so banking was owned by like certain individuals. So which was so these people were looking at their own benefit or their community. So to
Hmm.
make the credit available to masses, the government nationalized the banks.
Okay. Anyone else has a answer? Okay. So nationalized bank is where nationalized bank form a part of commercial banks, and it is called a nationalized bank because government owns more than 50% ownership in those banks. That is why it's called as a nationalized bank.
Yes, yes.
Okay.
मतलब they
Now,
took ownership of these banks, right? ऐसा कुछ हुआ था.
yes.
Yeah.
What is an overdraft? हमने करंट अकाउंट में ये सुना था कि you can withdraw more than your saved amount. Let's say you put in 100 rupees in your account. In savings account, you can only withdraw 100 rupees. Whereas in a current account, you can withdraw more than 100 rupees. The amount beyond 100 rupees which you withdraw is called as an overdraft. Yes?
Yes, understood.
Some few concepts of banking is credit worthiness. When you're giving loan, like we had tried to understand an example where a friend of us is asking for loan and he has 200 rupees of debt and 100 rupees of net worth. Here we are trying to analyze his credit worthiness, his ability to pay. And since he is a friend, his willingness to pay is 0. है ना?
Yeah.
True.
Good one.
So his credit worthiness is pretty bad.
Yeah.
Yeah.
And there is another concept in banking which is called non-performing assets. Non-performing assets are, हमने previous slide में ये पढ़ा था, banking के लिए asset है loan. And if a loan is remaining unpaid for a specific period of time, usually 90 days or 180 days, it becomes a non-performing asset.
Yes.
Clear? Okay.
So
There are
credit
different modes.
worthiness is our CIBIL.
हाँ, ability and willingness to pay assess करना है. Ability to pay we'll assess using वो ratios analysis. Willingness to pay you
कुछ
will analyze. हाँ,
I'm saying CIBIL score would be our credit worthiness, right?
that can also be a part of your
Okay.
analysis. Yes, that is not completely sufficient. That is also a part of your analysis. Okay.
Okay.
Yes.
Okay. There are different modes of payments, which is check, NEFT, RTGS, UPI, IMPS. Just explaining the modes of payment. नेफ्ट होती है नेशनल इलेक्ट्रॉनिक फंड ट्रांसफर, आरटीजीएस होती है रियल टाइम ग्रॉस ट्रांसफर, यूपीआई होती है यूनिफाइड पेमेंट इंटरफेस, आईएमपीएस होती है इमीडिएट पेमेंट सर्विस. Some other informations on banking would be repo rate. Repo rate is the rate at which central bank, which is RBI, gives to commercial bank. Reverse repo rate is where commercial bank parks its money in the central bank to earn interest. Then there is cash reserve ratio. Cash reserve ratio is the percentage of deposits that is to be maintained by the bank in cash. And then there is statutory liquidity ratio, the percentage of deposits to be maintained in liquid assets. Liquid assets क्या होती है? It is something very similar to your current assets, which can be converted into cash immediately.
Yes.
Perfect. Yes.
Yes.
That marks the end of our 2-hour session. Yes, someone had something to say.
So I wanted to ask कि मतलब नेफ्ट आरटीजीएस और इनका डिफरेंस याद रखना जरूरी है बस या फिर डेफिनेशन इनफ है मतलब एक्रोनिम
मतलब
इनफ है.
I have given these concepts because we don't know how interviews can take a turn. वो पूछ सकते हैं कि आपको बैंकिंग आती है, पता नहीं कोई भी बैंक का न्यूज़ आ गया and then the interviewer read about it and then he wanted to test you on your knowledge. So he wanted to ask you this question. अगर आप BCom बोलोगे, you have read BCom, studied BCom, then banking is it was the most sorted of career after Bachelor of Commerce or any commerce stream. So उनके लिए तो definitely पढ़ना होगा, but For a non-commerce, non-finance person, just having a brief understanding would be sufficient.
I had one subject like during my graduation or during one of the semester there was one subject on the finance. उसको देख के ये ना सोच ले कि सारा ही आता होगा इसको तो.
नहीं वो you can be pretty frank in interviews कि ये I took it because I wanted to explore the subject and I understood what it requires. I knew my strengths lied somewhere else, so I decided to pursue my strength.
Okay, thank you.
Perfect. Any questions?
वो जो रिवर्स रेपो रेट था उसमें बेसिकली ये है कि कमर्शियल बैंक मतलब कमर्शियल बैंक सेंट्रल बैंक में पैसा डालता है फॉर द सेक ऑफ इंटरेस्ट.
So commercial banks are supposed to maintain some mandated amount of money in central bank. उसके लिए जो भी इंटरेस्ट रेट वो कमर्शियल बैंक्स को मिलती है उसको रिवर्स रेपो रेट बोलते हैं. And if the commercial bank wants, they can park some excess fund also in the banks, in the central bank. And
Okay.
the interest that commercial bank receives from central bank for the amount parked by commercial bank in the central bank is called reverse repo.
Got it.
Anyone else? सारे ड्रॉप कर दिया क्या?
हम जा रहे हैं.
हाँ सारे लोग हैं.
अच्छा, perfect. Very happy to have interested candidates discuss करने.
Thank you, thank you.
Thank you. Thanks to you guys.
Thank you. No, you made it very easy. I was very scared of finance. मतलब था भी नहीं कभी सब्जेक्ट बट स्टिल
+1.
Nice.
+2.
मुझे भी डर लगता था.
बढ़िया. Thank you. Really happy that it was helpful.
Bye.
So we'll be having more sessions on finance, right?
अगर आपको चाहिए तो you can actually request. We can have more sessions. That's not an issue.
नहीं मतलब whatever जैसे मार्केटिंग पे हुआ so this much is enough if we do this much so it will cover the basics of finance and we
Yes.
will be able to answer.
Yes. थोड़ा सा आपकी साइड से भी पढ़ना जरूरी होता है कि आई हैव गिवन द ब्रॉड टॉपिक्स कि इफ यू आर इंटरेस्टेड यू गेन्ड सम नॉलेज. अभी पहले से तो आपको पता था कि ये बहुत बड़ा बिग जायंट वॉल ऑफ चाइना, तो अभी आपको लग रहा है अरे ये तो छोटा सा कॉम्पाउंड है मैं पार कर सकता हूँ, एंड देन यू गेन सम इंटरेस्ट, तो आप पढ़ सकते हो. एंड देन इफ यू हैव एनी डाउट्स यू कैन रीच आउट. बट दिस इज कंप्लीट फाइनेंस, touched as much as possible on everything.
Yeah, okay. So basically we can study कुछ companies या कुछ ऐसे organization या कुछ ऐसा हुआ हो
हाँ
recent में that would
हाँ
back up.
हाँ. अगर कोई फाइनेंस रिलेटेड कोई भी आर्टिकल आएगा यू विल बी एबल टू मेक सम सेंस आउट ऑफ दैट.
Yeah, got it.
Mayur, I wanted to ask one thing. So, not related to what you taught today. So, suppose I'm interested towards the finance, but if I go to college, I'll be competing against the people, those who are CAs or FRM or like other CFA qualifications. So,
Yes.
will they be having an edge over me, like in term of career, or organizations would prefer to have these people? So I like, will I be
So
at par with them if I don't have those qualifications? I don't have any background in finance, but if I find it interesting and I want to pursue a career in the same,
जो
can you
हमने
comment on
यहाँ पे
that?
ऑब्जर्व किया है, the things that I have observed here is people usually pursued CFA along with their MBA. So if you're interested in finance, pursuing a course CFA along with your MBA will definitely give you the required qualification. Coming on the edge, definitely as a person who has completed his CA will have more experience, or he or she would have spent more time on finance. So that is a small bit of edge that they will have. But companies don't uh, directly discriminate engineers or non-finance people in finance. If you have done a CFA, you need to showcase your interest in the finance field by one or another method. For example, CFA is one course where most of them took, and showed their interest in the domain of finance.
So is CFA part of curriculum in the B school, or like I think there's a separate exam that we need to appear for.
That's a separate professional exam that you will have to take.
But being in an MBA college, so I would be taught some subject that would be overlapping, and it would be easy for me to
Yes,
clear
yes,
CFA.
yes, perfect.
Also, is it hectic to we know that schedule is quite packed in the first year in MBA. So, will we be able to find time to pursue a CFA exam?
So this depends upon your individual personal capability. There are people who have been able to do this and have successfully completed their level 1 examinations. And if you put in the effort, it is just willingness over everything else. If you are willing to do it, you will be able to do it. अभी तो आप तीनों चारों लोग हम चारों लोग 2 घंटे बैठे हैं फाइनेंस सुनने के लिए. It was our willingness. So if you're willing to do it, you will be able to do it.
Sure. Thanks, Mayur.
मेरा
बढ़िया.
क्वेश्चन थोड़ा जस्ट अपोजिट है. How
हाँ.
many subjects are there first year में related to finance and
वो कॉलेज टू कॉलेज डिपेंड करेगा, बट यू विल हैव एटलीस्ट 40 to 50% फाइनेंस की सब्जेक्ट्स.
in first year?
हाँ, तो हमारी फाइनेंशियल अकाउंटिंग थी, कॉस्ट मैनेजमेंट अकाउंटिंग था. In our first term, we had 6 subjects. Out of 6, 2 were finance. Term 2 में again there were 2 finance. नहीं, there were 3 finance and 3 finance. Term 3 में थोड़ा कम हो गया था. Term 3 did not have major finance. You will have good 30 to 40% finance easily.
Okay.
अरे कोई बात नहीं. You can always reach out the most easiest subject.
You made it easy today, so I have some confidence कि हाँ कर लूंगी. But my previous history does not show or approve of my confidence. So
But there's one advantage to finance. It's quite objective. So it's for other subjects, objectivity may vary, but for finance, it's quite objective. It's not subjective.
हाँ. अभी तुम लोगों को एक और you have one more responsibility. ऑफिशियल अनऑफिशियल हर ग्रुप में जाके ये बोल, जिन्होंने फाइनेंस मिस किया उन्होंने बहुत ज्यादा रिग्रेट करना चाहिए, क्योंकि दे मिस्ड अ ग्रेट अपॉर्चुनिटी टू लर्न लाइव.
I agree that.
Definitely.
Sure. Form of
That
feel कराएंगे.
was on a lighter note. आप खुद से डिसाइड कर सकते हो. I just wanted to say that.
मैं
चलो,
तो सोच के आई थी कि चाहे कितनी बुड़बक लगूं पर सारे क्वेश्चन पूछूंगी.
बढ़िया. That should be the attitude. चलो, I think you guys also have some more sessions lined up. I will not take more of your time unless you have some doubts.
No.
No doubts, Mayur.
No.
Sure.
If I come
Perfect.
across any doubt, I'll reach out to you. But thanks for the session. It was an amazing session. Thank you.
Perfect. Thank you, guys. Thank
Thank
you
you.
for
Thank you, ma'am.
participating.
Thank you. Okay.
Bye,
Bye-bye.
everyone.
Bye. Bye, everyone.